All right. Let me just do this. Oh, we got it out. We're here. FlowPatrol a little late, everybody. I got it out in time for the webinar, though, so thank y'all for your patience on that. We had an erroneous strike, bad data going into the report, so I got that out of there, wrenched it out of there, and here we are in a day when the market is also quite weak. So I'm going to go over FlowPatrol today. Thank y'all for joining us. I got the sound effects, so let's get some of those. Yeah, we're here. All right, we did it. So we're going to touch on FlowPatrol this morning. That is the purpose of this, but I can't not talk about what's happening in the market today, obviously, as we're a little bit weak. So if you got any questions there, I will see in the stream. Appreciate it. Also, I'll be live again with Oliver Rennick, Future of Finance. You check that out. We did it from the floor of the SIBO yesterday. I flew from LaGuardia to Chicago, or was supposed to, on Tuesday night for this show. Chicago airport shut down because of weather. They cleared the air traffic controller. I got landed in Detroit. I drove through a biblical storm, I will say, Monday night from Detroit to Chicago. I thought that would be an interesting drive. Not an interesting drive. It's just a bunch of fields. And then it's like Michigan University, then more fields. And it rained like crazy and it lightning like crazy. And then I made it. And I'm like, SIBO, you're not keeping me off of the exchange, guys. I'm going to show up there at any rate. Enough of my dribble and my nonsense. I'm going to do a quick check of the market. And the reason I'm starting with this is because I want to make sure that everyone has highlighted this. Now, we're going to talk about FlowPatrol here, but you're getting a little bit of insight because the market is so weak. We've been talking about this thing called the seek and destroy algo. Now, why am I starting with that today before I go to FlowPatrol? It's because I want to show you something, right? These huge strikes right here, 63.45, 63.40, and then you see there's a bunch of short puts down here. So what has happened today is the market participants have sold puts down there. The market is attracted to these types of strikes like glue. They are like flies the honey, bears the honey. There's a whole bunch of other metaphors I could probably use. But we've been calling this the seek and destroy algo because what happens is these strikes show up and then the market goes like a rocket to it. If you don't believe me, look at this. These strikes were not here this morning. They weren't there, right? This is trace. We're unwinding this. These are all the 0 DTE strikes that we have on the day today, right? So if I fast forward this, watch these strikes suddenly pop up, and then you're going to see the market just go, boom, look, like a rocket, right? Right down into that level. So those are the strikes to watch. This is the stuff I think you got to pay attention to today. If you're expecting a big bounce, anything is obviously possible, but lately we've just been finding these strikes and just going for them, right? And if you don't believe that has been the trend, guess what happened yesterday? What did we talk about? We talked about this with Oliver on the show live. Look at these strikes come in right here, right? And this is Hero. This is the real-time options deltas. They sell the deltas down until we tag that strike. And then when we tag the strike, watch what happens. We tag the strike. There it is. And then all of a sudden, the deltas go flat. See it? Look, they stop. It's like, okay, mission accomplished. We're good. We tagged that strike and now we're done. So those strikes for today are at obviously the 40 level, right? That's kind of what we're paying attention to right now. Now, if you found this interesting at all, if you're like, hey, Brent, how can I watch this? I know a lot of your subscribers already and members. Thank you so much. But go here, spotgamma.com/FlowPatrol. You can sign up for FlowPatrol if you haven't already. More importantly, if you go to spotgamma.com, you sign up and you use the code FLOW50, that's FLOW50, you get half off your first month. You got Jackson Hole coming up on Friday. You got NVIDIA earnings next week. You got the seek and destroy algo on the trace right now. So 50% off your first month is real cheap. And what a lot of people say is like, hey, I'll try this out. And if I make enough to pay for the membership, then I'll buy the membership. And I love that idea. You know, proof is in the pudding, right? So pay attention to those strikes today. That's what's on the tape. Now, let's go over to FlowPatrol. FlowPatrol is a new report we have just launched about a week ago. The response to this has been incredible. I have pretty high expectations of things. People that work with me generally don't like me because I'm always complaining that I think things should be better. But this has been going really well, and I'm super excited that people like it. I put a ton of effort in working into this. My team put a ton of effort in working into this, and so we're really excited about this report. Now, this report, what it does is it uses our proprietary positioning system. We look at how we think buy-side traders are positioned. So buy-side is retail and hedge funds. asset managers, those types of entities. And the reason we focus on those types of entities is because we believe those are the flows that are, number one, dynamically hedged. So if you want to think about hedging flows and how the market makers are likely to react into various price moves, that positioning is helpful. But number two, which I think is really interesting in an environment like this, is sentiment, right? Palantir, for example, has been getting pounded. I mean, pounded is not even the right word for it. So how are traders reacting into those flows? For example, you saw it show up on the FlowPatrol report. Let me slow down a little. The other one is NVIDIA. NVIDIA is in the spotlight. Why? Because Meta yesterday said that they may cut back on spending, and a lot of people are suddenly on this train, the AI is useless train, which useless is not the right word, but have we overspent on it? Maybe. The proverbial we. And then lastly, interesting today on VIX expiration, we see a lot of what's called negative Vega exposure in here. And really what this is rolling. So we can go through all those positions and see what's going on, right? Now, if you want to dig more into this report and you say, hey, that Palantir positioning is really interesting, Brent, what else can I get from that? The next step to go is you go into the SpotGamma platform. Again, if you use Flow50, you can get 50% off your first month. You got to go alpha to get access to these tools like Trace. But you can go into the report then and say, hey, what are people doing in NVIDIA? What are people doing? I can give myself a 5. I can't skew the stats. All right, NVIDIA. What do the positions look like into earnings, for example? So if you see positive gamma strikes here, those are long options for dealers versus negative gamma, which is short options for dealers, for example. So you can dig more into that positions. You can dig more into the open interest to see what the proprietary open interest is, et cetera. All right. Back to the report. So what do we see today? The interesting thing, and this report is based off of pre-market data. So this is all the trades from yesterday, and the report generally will come out pre-market. Today we were a little bit late. But what you notice is bullish SPY delta, which is pretty interesting. We call it unusual as well because it's the 97th percentile. This is over the last 2 weeks. We're going to expand that time window to 30 days. But people seem to be buying the dip in spiders, which was a curious position, right? And then the other one you see here is bearish Vega, which is essentially looks like people bought VIX puts with the VIX up a little bit. And the thing about that, you got to note though, is VIX expiration was today, right? So we had a lot of people yesterday, last day to trade VIX options, they got to adjust or roll their position. So I discount that VIX positioning a little bit, but the spider delta is interesting. And then obviously a lot of Vega exposure here in NVIDIA, and that Vega is essentially convexity. It's longer dated, out of the money options that people are buying. Makes sense given the fact that we have earnings next week. And then now the earnings is a little tenuous, right? It's a little chippy. We can talk about that in a second as well. And then Palantir, obviously, there's a lot of gamma, a lot of Vega. This brought out the vol traders, right? When you get a vol spike like this, you're going to get the vol traders to come out. And the stock's down, obviously, so much. This longer dated positioning comes into play. So looking at the table here, there's you can see right here, someone sold a put spread. Is what it looks like, 5350, 5300. That person is probably sweating a little bit now at the moment, you would imagine. This is a put roll. You can see here somebody closed IWM 217 puts and rolled those down, the 215 strike. And then here are the bunch of VIX positions. You'll notice they're all in September. O means open, it's initiation, it's a new position. So you can see there's some short VIX puts in there against some longs, so it looks like some put spreads around those strikes. And then this is an interesting one, 30,000 of the new VIX calls, 20 strike calls for September. We in the SpotGamma reports have been pitching the idea of buying VIX call spreads for September earlier this week. And the reason is because, look, vol was so cheap. And it was funny because when we're talking about how vol is cheap, I noticed a lot of the Volatility Twitterati saying, hey, if you thought, VIX was cheap and you bought VIX calls, then you've been getting pounded. And that was true up until this week, right? And then when we hit this week and we see 1 month implied vols around 10, and then you see, hey, there's a couple of events coming up, which is likely to hold those VIX prices up. Then those VIX calls start to make a little bit of sense. Now, they have not been these big Yahtzee, big paydays, certainly not yet. But man, if Powell comes off as just like a little bit kind of edgy, NVIDIA is not that great, then VIX calls are going to pay, right? And that's the point. The other one we've been pitching, obviously, is short-dated S&P put spreads. If you follow us on X or Twitter, you will see that we put in this very interesting out of the money butterfly trade, which when we said, hey, this is our interesting trade, I think it was a 100-point wide spread. It cost us $1. And people were like, no way. And then suddenly today they're like, oh, maybe. Yeah, are you likely to get paid on a 3-4% out of the money fly? No, probably not. But the risk reward is pretty good when you have the catalyst, right? So anyways, moving on. Single stocks. MicroStrategy. I mean, there was a lot of people yesterday saying, hey, let's dunk on MicroStrategy. Maybe it's going out of business. I really don't know. But you can see what somebody did here is they rolled some calls down. So they were short. They covered those, and now they sold the 355s. And then here's some of those NVIDIA spreads. As you can see here, these are also, looks like some closing of call spreads here and initiations as well. And then this RGTI has been a very persistent trade for somebody quite big. This is for tomorrow's expiration. So looking at the sector flows, you get a lot of spiders again. The other thing is that the response to the downside in the equity market, right, or in the tech stuff, was actually showing as bullish. And sometimes I think what that can be is markets come down and people close or roll positions out, right? They take some of that risk off, they monetize some of their positions, for example, and then that is the possibly bullish flow that you're really seeing here. And so you're getting some pretty long, high delta exposures. But I think a lot of that is sort of repositioning in the dip, which shows up as bullish, right? Because if I was long a bunch of puts, they get paid, I roll those down and out, that shows up as a positive delta net flow, right? So something to consider there. And then a lot of flow into these volatility ETFs as well. I mean, because what do you do? What is the behavior that everybody does typically in a market like this, right? Let's sell vol. Let's sell vol. Let's sell options. That's how we want to respond. And what happens then is when you get caught short, we get a jump, right? And that starts to exacerbate volatility. And I think maybe we're getting a little bit of that today. In other words, if you shorted an option at a 10% implied vol, you had a cover yesterday when vol hit 13. Maybe some other people tried to sell it at 13, and then now we're at 16, right? So you get this jump or you get this quick kind of reaction. The directional positioning here is a delta-based monitor, so we're showing you the top positions with all the different changes in delta. A lot of rolls and a lot of shifting, obviously, in the aforementioned names like NVIDIA and MicroStrategy. Not surprising that those names are so dominant considering how negative MicroStrategy was. And then again, the focus on NVIDIA. I mean, NVIDIA is this market. We talked about in the founder's note this morning, 35% of the S&P, right, is these tech names, these top tech stocks. And so if you look at our founder's note here, again, if you want to read this, subscribe, SpotGamma.com, get the alpha membership, put in Flow50. You can read this note, watch Trace. But this is the thing that we were highlighting here, right? Right there, 35% of the S&P is these direct kind of AI names. Like maybe Apple is not directly that AI kind of name, but it's kind of very adjacent, right? And so, if NVIDIA is like, yeah, demand's not so good, we don't know, then there's a lot of reweighting that has to be done. Palantir, here are the big trades for Palantir in the short term. You can see right here what somebody did is they bought the 170 calls. And what did they do? They sold a chunk of the 180 calls, as you can see here. That trade not doing too great at the moment, as you can imagine, because that stock has sunk quite a bit. So this is a roll down, closing the 180s and now initiating the 170s. Not a good trade at the moment. Taiwan Semi right here, I thought this was interesting. That's a pretty big put sale, as you can see here, 20,000 lot of the 240 puts into December. Again, if you see O means open, initiated, new position. And this is what the buy side is doing. We always kind of like have been knocking the flow gurus on Twitter because they'll see a big trade and they'll post it up, but then they'll tell you that this was bought or this was sold, right? What does that mean? Who bought and who sold? It matters. A lot of the flow is market maker to market maker. And so there's not like this dynamic hedge that's there. And it's not, a market maker is not buying or selling 20,000 Taiwan Semi puts because they think it's about to go down, right? They may hedge themselves, but that's distinct from saying, hey, some really smart guy at some really big hedge fund or a gal at some big hedge fund is like, I think, Taiwan Semi is amazing. I'm going to sell a whole bunch of puts, right? Those are two different drivers, like two different sentiment, two different, whole different mentality there, right? Whole different purpose for those flows. So who is doing the trading matters, obviously. The This is a very interesting trade in the gold spread as well. What you see here is this is a call vertical credit. If I have one knock on the FlowPatrol report, I'm trying to improve this spread identification. A lot tougher than you would think, given we're looking at changes in positioning across all these different stocks. So that can be different. But what happened here is somebody closed their buy right here, the 320. They got rid of that position, and then it looks like they closed as well to sell. So this is a little bit more of what looks like a strangle trade that closed as opposed to I'm sorry, this was a call actually. So doing the real-time analysis here, obviously I'm tripping up a little bit, but quite a big gold trade there. So what did they do? They covered two call positions, right? They covered their call vertical. Sorry about that. Again, real time. Gamma. Why does Gamma matter? Gamma is highest for at-the-money options as we get closer to expiration. So these are going to be the bigger short-term positions that are changing. Not always 0 DTE or next expiration. They can be a little bit longer. But if you think about Delta as, hey, what are the biggest in-the-money positions changing, kind of the highest value positions changing, that's what the Delta exposure is going to show you, right? And then when you go to the Gamma positioning, it's the shorter dated at-the-money stuff that's kind of shifting around a lot. 822, this is a pretty interesting position. Somebody opens up 95 strike puts in IEF. You got Powell tomorrow, right? So that's a decent little position coming on there. Again, we already highlighted that gold position. A lot of MicroStrategy, like a lot of NVIDIA, again, dominating what's happening. These Microsoft 520 calls for 822, this looks like a little bit of a bounce play. That short-dated flow, a lot of it can just be a lot of hedging, short-dated hedging around events. Maybe somebody trying to buy the dip or possibly even Gamma as in like Microsoft comes down and I'm short, I could buy a couple of calls to try to lock those positions in. And so with these shorter dated positions, obviously there can be a lot of flickering and movement around of various trades. But Palantir, I would say, is interesting to me because it's just very quiet. There's that one big trade, right? And despite all of that weakness, there's not a ton of actual options flows in terms of buy side establishing big positions, right? You would think if the stock was down that much and it was like, hey, all this value has been unlocked in the stock, then, why didn't, somebody buy a huge chunk of calls, right, for October? Like, we're just not seeing that in the positioning right now. And further, I'm going to show you in a moment how you could tell it's a lot of mainly high frequency or day trading positions, right? And a lot of that, if you think about the momentum unwind, right, that's what has happened. And by the way, just to take a quick segue, what do we talk about? What level had to get tagged, right, in the seek and destroy algo? Well, there we are. We did it, right? We did it, everybody. Applause for the seek and destroy algo. We tagged the strike. You can see it right there. We dip down into this level. So I think we probably stick to this. If you look at the Gamma positioning, and there's a ton of support below this level. Hero is the purple line. It's now up a little bit. And so what did yesterday do? We sold off in the afternoon. We just kind of skidded along the bottom. Well, that's what this looks like at the moment, right? Like a lot of skidding around this bottom because of these big strikes and these big flows. So maybe we're kind of done for day. We'll have to consider that. But hopefully you very quickly signed up with Flow50 at SpotGamma. And we're able to catch that trade. Volatility positioning. What's interesting about volatility positioning is to have higher Vega trades, you need to trade slightly longer dated options, generally speaking. And so that is going to be a little bit more of a material position, right? So you're going to see stuff in here, which I think is actually maybe some of the more interesting positions because you're going to see stuff that has, again, longer dated expirations to it. So a lot of the other tables, like the Gamma tables, a lot of 822 expiration, but here you're seeing something interesting here, right? Like somebody sold the 245 calls. They covered their position, as you can see there, right? So they bought those to cover the 1125. So those, as Apple comes down, they cover. MDT, not a name that you usually see. That's kind of an unusual position for the 618. Somebody bought 7,000 of those. I don't know anything about MTT, but that's an interesting one to show up. And you can see there's also some solar stocks showing up on here with some longer dated positions here in looks like a rollout, right? They had the 250 calls for Jan, and then they bought instead the 280 calls for June. So some type of a rollout. And the reason I call it a roll is because they covered that first position. They opened this longer dated position. We don't identify this as a spread, but that's a little bit of an unusual flow together. So when you're looking at these positions, so remember I was just sort of ragging on not seeing a longer dated position in Palantir. There is one for 2017. Looks like somebody was short some of those calls and maybe they covered them or they sold the calls that they had. So that is one longer dated position that did come in. All right, largest premium trades here. I don't generally follow the largest premium trades. I know that's something that's big in the market. A lot of people like to watch this thing. The Flow fellas on Twitter like to say, hey, $1 million spent in this name. So that trade is here. I'm not going to spend a ton of time on that. But if you're looking for some unusual flows that show up, index flows, we break these out because they can have such large notional value that we split out the interesting index trades on the day. And for the first time we saw, I shouldn't say the first time, but for the first time in a bit, we saw some bigger trades actually emerge. You can see right here, for example, we've talked about this IWM put roll a couple of times. What else we got in here? Not anything of just kind of like stunning size showing up here in the S&P, as you can see. And then on the index side as well, index fairly quiet. This report did come out just a few minutes before we showed up online, so I did not have a chance to go through this with a fine-tooth comb. So apologies that we're going through this at the moment. And now we get to what has been flagged by a lot of people as the most interesting stuff, our unusual options positions. And so what this is showing you is the names that have kind of statistic anomalies, I would say, in terms of the trading. And so the one that shows up that I've never seen show up in the report before is, I don't know what Galaxy, I'm guessing this is Galaxy, GLXY. You can see here there's a short dated, what shows up as a risk reversal trade. So that's a little bit interesting. These IQs are interesting as well. Looks like somebody closed up a strangle. As you can see here, they sold to cover those positions. Hut, not familiar with that. I don't know, is that Pizza Hut? So there's a lot of unusual stuff showing up in here. You go and check the news, check the tape. A lot of times you'll see, hey, you know, some politician did something or some unusual news event comes out with some of this stuff, like a PTCT. Not familiar with a lot of these names, but that's the whole point, right? We're going to find or flag different and changing unusual volumes in there. And this TSM showing up on here is an unusual put seller, right? So that might be something to watch in Taiwan Semi. The fact that somebody did establish a pretty big position at those 240 puts. Statistically significant positions, any positions that have an extreme high or extreme low in terms of percentile data across delta, gamma, or vega positioning is going to show up in here. So that's why you're seeing VIX, obviously, we mentioned before. This RGDTI has been showing a lot. Hopefully that name goes away soon because it's not the most exciting stock, I got to admit to. But these are the names that actually have statistically unusual positions. And then obviously here's the changing in all the delta chart, delta, gamma, most active options, etc. The heat map here is one that I will check a lot because it just gives you a quick snapshot of what the exposures are across sectors. So obviously yesterday, right, we had such asymmetric kind of like downside in tech. Tech is showing positive gamma, positive deltas as well. So it really does reflect as some kind of bullish positioning in those bigger sectors. The metals was very negative, crypto very negative. The other thing that's funny in these volatility ETFs is a lot of that is also not just the VIX complex, but also these UVXYs and things like that. So people betting that VIX is actually going to come down, which is not shocking considering that people love to, hey, look, this is how we get alpha. We short vol. Well, guess what? You know, that doesn't always work, right? When we have a persistent vol kind of shock. Most famously, this is what led to Volmageddon, right? So I'm not saying that we're on the precipice of Volmageddon here, but initially, you know, you always get people that dip their toe in the water, like, hey, it's a dip, let's sell vol. And that's what seems to be what they try to do. And those people are likely getting rolled over a little bit. So I want to end on, before we can check questions and then just take another look at the tape here, I wanted to look or end on this heavy day trading flow. There are a lot of names that will show up, right, that have massive options volume and unusual prints, but those prints are not showing up in our positioning data, which simply means that, hey, it's day trading. So someone bought a bunch of calls or bought a bunch of puts in the morning and they close that position out. So it doesn't ever show up in open interest and never impacts positioning. The other one is it could be a lot of just market makers and flow flickering like that. It's not actually somebody taking a stand. It's not a hedge fund saying, I love Taiwan Semi, I love Palantir, let me buy this dip. So what does that mean? Look at the flow yesterday in Palantir, for example. 1.7 million contracts changed hands yesterday, but only 349,000 contracts of actual buy-side open interest change hands, right? So what that's telling us is there was over 1.5 million contracts that traded yesterday that was just pure back and forth trading, right, for no other real purpose, right, other than momentum, whereas 350,000 contracts changed hands across retail, buy side, et cetera, of actual value, which, is still a decent amount of contracts to trade. But when you see the volume at 1.7 million, and then you compare this, you go, okay, like that's quite a divergence, right? Same thing in the spiders. You can see about 10% of positions in spiders and Qs actually materializes or goes to actual open interest. So if you're seeing a name, you're saying, hey, Brent, so many contracts traded yesterday in Palantir, like why does that not show up much in the positioning? You could check this table, and if it's on the table, then you know why, right? If something traded a ton you don't see on this table, then it should be included in the positions somewhere in there, right? And if it doesn't show up as a top position, it just means that maybe there's a lot of smaller trades, a lot of retail trades, right? As opposed to a big fund establishing a big position that would show up on the report. So just something to consider along with that. Now, for those of you who've been getting the FlowPatrol report, we love to hear about the interesting things you're finding, successes you're having with interesting trades or idea generation, right? The goal of this report is idea generation. It's trying to establish how people are adjusting positions. So we can go from this report and zoom into Equity Hub, which we can do here shortly. You can email me directly. Oops, didn't mean to do that one. You can email me directly, flowpatrol@spotgamma.com, and I'd love to hear what your feedback is on the report. I take good stuff as well as constructive criticism. So you're like, I'd love for you to do this or that. I'd love to hear that. We've gotten some great feedback from some people there. But yeah, what do you think about it? How are you feeling about it? Email me, flowpatrol@spotgamma.com. And by the way, we'd love for you to share this report. If you share the link, spotgamma.com/flowpatrol, throw the report in your Discord channel, throw it in your social medias, whatever you got. Say, hey, everybody, check this report out because you got another week where we're going to be offering it for free. And then in early September, it goes away and you have to be a SpotGamma member in order to get this. So let's take a look at Palantir just because it was such a wild stock. And I want to see how you can take FlowPatrol and then extend this analysis. So we're going to go back to the SpotGamma trace page here. We'll go over to Equity Hub. I put this picture in Twitter earlier today, in the X earlier today, and I was talking about the gamma positioning. And so what we're going to see here is this is the gamma in Palantir. And so the more negative the gamma gets, right, we see dealers are short options. If you have negative, this is the dealer's perspective, right, the market maker's perspective. They have negative gamma positions. This is all driven by SpotGamma open interest, our proprietary open interest. As far as I know, we're the only people that do this across all exchanges, across all stocks in the U.S. And so the same flow that powers FlowPatrol powers this, right? So when you see is negative gamma here all the way to 146, 145, right? So if you look right here is where the positions seem to change. Now you say, okay, Brent, specifically, what is this? Well, if I go and I break this down to open interest, what do you see here? You see short calls actually all the way down, couple of long puts, and then there's this kind of big spread right here, right, where it looks like the dealers are short calls, but they're long puts. So there's a big positive gamma position there. There's a couple of puts as well. You could see small positive blue bars. That means buy side sold the puts, retail or hedge funds sold the puts at that level. Now, those of you who know something about gamma know that when you have negative gamma, that implies or infers volatility. We have positive gamma and infers a lack of volatility. So what you see here is negative gamma all the way down through 145, which is kind of an interesting level, right? So if we go and we just bring up TradingView and, well, we can do it easier. Let's just check this chart. Where did Palantir bottom today? You see negative gamma strikes all the way down through here. Now you see 145 to kind of like 140, right? There's that positive gamma area. Stock traded all the way down to 142, which is pretty incredible. But this has the sense of exhaustion at the moment, right? Because now you're seeing the short puts come into play, right? Traders have sold puts, a little bit of positive gamma. So remember this level, 145 to kind of 140. Now, if we go and we look at Hero, what does Hero show us? Hero looks at every single trade that takes place in the name. We can't filter out real-time data in terms of what the entity is that bought it, right? But what we're looking for is the trend in flow. So if you see this purple line going down, what does that tell us? Traders sold calls and or bought puts. And so that is the opening flow. And we get all the way down to right in here, right? 143, and the flow seems to shut off. See that? The purple line goes flat, and that purple line going flat is telling us that, hey, it looks like they have backed off of this, right? It looks like the call sellers and the put buyers have backed off. That flow is not yet turned bullish, and meaning that that purple line's not going up, right? But we seem to have kind of leveled off here, right? Which implies to me that, okay, we can take kind of a breath, right? We could take a little bit of a breath because maybe the trade is done. And it's not coincidental, I don't think, that occurs right at this 145 area where we identified that positive gamma, right? So something definitely to consider there as we watch. And again, these real-time flows are so valuable when you're trying to assess the direction. Now, if we just look at Hero today for the whole S&P 500, remember what the big strikes were that we were flagging? Well, once we hit those strikes, you can see Hero just goes flat. Again, that when we hit that seek and destroy area, the strikes have gone dead, right? So what we're seeing right now is the deltas, once we got to that kind of even a little bit higher, 6350 kind of area right there, right? The flows have really died off. In other words, I'm not seeing a lot of put buying, not seeing a lot of call selling anymore. If we look at the single stock side of things, very negative, particularly longer dated flow. We watch this heavily at SpotGamma. Teal is 0 DTE. So for the SPX, that means today. For single stocks, that means Friday. You can see how that's only minus $221 million of negative delta today versus all expiration flow. So when we look up past today, you can see there's a lot of negative delta flow in there, right? Minus 1.6 billion. So that's a very bearish setup. This is something we talked about this morning in the founders notes as well. When you come in the founders notes, we highlighted the fact last night, how negative the flow was in the NASDAQ, right? Really big put buying. That dark purple line, long dated put buying outpaced all other flow in the NASDAQ. Same thing in single stocks, right? Hugely negative flow yesterday. So, that's some kind of fall through today. People are not aggressively buying the dips, right? That is clear right now. And so Powell's got his work kind of cut out for him tomorrow. Even in some of these single stocks, you would think you'd say, hey, generational buying opportunity in Palantir, right? It's down 10%. Nope, no one cares. Not yet. So, not as negative as yesterday so far. We're only into 11 in the morning. But at the moment, things just seem to have settled out. And then again, we have this really big kind of volatility suppressing position just in the 0 DTE space. And I can tell you that because if I toggle 0 DTE back and forth, you see the positions don't really change, right? Which means that these are all 0 DTE positions. So, implied support for today and today only, and that's kind of it. And then last but not least, let's end with the vol check. What are vols doing into the face of this kind of nasty sell-off? I'm comparing the vols against last night's close, right? And what you see here, so this is the change in SPX fixed strike vol. Sounds complicated. We'll tell you about it in a second. Versus last night. So what does this see? Well, so for the 63.40 strike, right, we see that short-dated vols are up 2 vol points. Longer-dated vols, so if you look around, NVIDIA earnings are up about 1 vol point. NVIDIA earnings are right here, right? And then the longer-dated are only up about a 1/4 point. So what this is telling us is people are worried about tomorrow. They're worried about Friday. Makes sense because we've had a fair amount of volatility. They're also worried about NVIDIA earnings. You can see the relative shade of green in there, particularly to the downside. We discussed this in the founder's note. If you want to know more about this, go to spotgamma.com, sign up. Flow50 gets you 50% off your first month. Longer dated vols, pretty quiet, actually. Considering the 2% sell-off, the kind of shift in it hasn't been a huge shift in volatility expectations. It's been a small shift in vol expectations. We're talking about this in the founder's note today, how this has come down a little bit, how much is weighing on NVIDIA earnings. people longer dated don't really care all that much about this at the moment. So this is critical to watch, right? Because if the market's selling off but vol is not spiking, then that oftentimes is a dip buying opportunity in our view. Vol is responding right now. Things are getting a little bit chippy right now. So, things seem fairly valued, I would say. The problem with watching the VIX in this instance is the VIX can overestimate how much anxiety there is. I'm not saying that's necessarily the case right here, but you do have to respect the fact that, hey, fixed strike vols are only up about 30 bips. So why can the VIX kind of throw us off a little bit? Well, we've talked about this a lot in the founder's notes, but this is a 1 month skew curve for the S&P. And if the VIX mainly takes in at the money options into its calculation, I'm going way off the FlowPatrol here, but stick with me. Yesterday we were trading on 6,400. So what's the implied vol at 6,400? It's a 13, right? So the biggest input into the VIX is essentially 13. What happens when the market sells off 1%? Well, the biggest input now goes to 14. Right? So the VIX magically gets higher numbers fed into its calculation simply as a function of the fact that the market declined, right? So that's why we watch fixed strike vol, because it's telling us the truth of what's happening under the hood. Sometimes the VIX can give you maybe some false information, right? Just because the calculation can get a little bit skewed. Yeah, so a couple questions in the sector exposure. Everything in the report is just showing the hedge fund side of the equation. So what is just the exposure from funds, right? We're not looking at the market maker side. So if it's bullish deltas, hedge funds bought calls or sold puts, right? If it's high gamma, right, or positive gamma, which is what Palantir seems to indicate, right? That's from people selling puts or selling calls, right? That's positive gamma, long options. High gamma is from long options. I get confused myself sometimes. And negative vega, you got to be short volatility or short volatility position. So this is a little bit different because when you look at Equity Hub, you're seeing the market maker view of buy side positioning, right? What is the market maker side of the equation there? Whereas when we're looking at FlowPatrol, it's just showing us exactly what the hedge funds did, right? What is their positions? How do their positions change? So a fund yesterday, right, bought 60,000 IWM 215 puts and they sold 59,000 of the 217. So clearly just rolled that position. How did bullish delta in equity ETF and tech sector lead to the drop this morning? It didn't. I don't think it led to the drop this morning. I think that there was, when you go through the report, you don't see, we don't get the feeling of people buying, 50,000 lots of puts anywhere, right? There's a lot of, I think, tactical, maybe rolling of positions down. I didn't get this huge impression of panic is what I guess is what I'm saying from this report, right? Bullish deltas, yes, people positioning, for volatility in these, which is kind of what you'd expect. And then you get a little bit of a VIX, roll down on positioning. And so, you look at the market right now, and you say, well, Brent, market is down a lot right now, right? So, was FlowPatrol right or wrong? Well, it's not necessarily either. That's showing you how traders are reacting to positions, right? Then you got to kind of go, okay, why are they reacting the way that they're reacting? They could be rolling positions down, as we covered. If they were buying tons of puts, then I would think that, hey, that's really suggestive of expecting longer term downside, but they're generally not, right? That's not what we're seeing in the report. And then you take that and you look at the vols like we just showed you, and you go, well, longer dated vols didn't really move much, right? We talked about that in the founder's note this morning. So it's kind of like, okay, there's some tactical positioning around NVIDIA and Jackson Hole. That's also what vol is telling us. And so it's kind of like, we're waiting, and you could put these pieces together. Now, had people in the FlowPatrol report be like, somebody just bought 100,000 NVIDIA puts, somebody just bought 50,000 SPX puts at the 6,200 strike for September, and you go, okay, like we got to worry about this extended downside, but you just don't see that necessarily reflected. Certainly some names like MicroStrategy, that's looking kind of ugly. But you start to put these themes together, you start to see, and then obviously in those unusual flows where people are kind of staking a flag, right? And so it's going to be interesting, particularly in Palantir. It's like, do we see, as the stock is now down around 140, do we see people buying calls? Like, not like tomorrow's calls, but like these calls, or like January calls, for example, or are they selling Dec or Jan puts in size, right? That's going to be kind of that flag. So that's why that stuff is critical. And I think that when you're looking at FlowPatrol, get a sense of those positions, right? Does it make sense? Is that click like, okay, it makes sense. NVIDIA makes sense. They're getting long Vega. That's what I expect. The bullish flow is interesting. I wouldn't have expected that, right? So that, is there a signal in that? Now, why did we roll over and go down this morning? I mean, as soon as I saw this position show up, right, I put it on Twitter. So, and I do that, not a lot of members are like, why aren't you telling us in, sometimes in the Discord, whatever. I'm trying to actively timestamp stuff because people always go, well, hindsight, right? Well, why would I flag this giant position, right? And we've seen this we literally call it the seek and destroy algo because if you look in our PM notes, we chronicle this so many times where the market finds the big strike, right, and then just kind of goes for it. So I think we were talking about that. Was it last night? The search and destroy algo. We've talked about it a bunch of times over the last week. I write so many notes all the time. I get lost with some of them. But search and destroy is there. You can ask any SpotGamma member who's been a member for longer than a week, and they'll know exactly what we're talking about, right? So, does that position draw the market down? I think you can make that argument. What strengthens that argument? Because as soon as we tag that level, you can see the flow stop being so negative. See that? This hero bounces when S&P reaches the target. So, again, when we're in the midst of this, you go, well, FlowPatrol seems kind of crazy because they're saying buying the dip, but then, look at how much of this is also 0 DTE. See this? So purple, all flow, teal is 0 DTE. The whole move down today is 0 DTE, right? Until we get down around 63, kind of 50-ish, 46, right in that area. And then what happens? The 0 DT algo shuts off. Look at that. The teal line, it just goes sideways. It's done. It's like, but what did the longer dated flow do? It starts to bounce. See that separation between the two? Now, why is that separating? Let's break that down. What are people doing? Oh, they sold puts. Look at that. They sold puts in pretty good size too. See that? So if you're reading the FlowPatrol, you're going, bullish flow and spiders? What? Now today I'm seeing people selling puts. Not today's puts, right? Longer dated puts. I got to remember that and see what shows up in FlowPatrol tomorrow. But that's super interesting position, right? Like this is unusual to see such a stance or a divergence, right, in those longer dated flows. So can you back up, Brent, that it says algo? Well, we get to the target strikes, the ones we timestamped on Twitter, and as soon as we hit this level, 0 DT shuts off. We see these coincidences every single day, and it's kind of like, hey, how many times do you go and read the Jane Street paper about SEBI and then tell me you don't see it here? And that flow seems to be almost increasing a little bit. So really interesting stuff. Again, this suggests a lot of 0 DT impacts. Matthew, I see you there. Lots of new levered ETF structured products. If it's a buy-side entity, you'll see it show up in the flow, right? And I've been trying to go through and identify certain flows like QYLD and different flows like that. But if it is a buy-side entity, it shows up in our reports. And look, if a QYLD is selling NASDAQ calls, well, that still's got to be hedged, right? You could argue that the hedging is going to be different because it's not a systematic flow, but people still know, but that's still got to be hedged, right? Someone's still hedging that's a dynamic kind of flow. Yes, Ken's asking about live calls and updates. I try to be in Discord. I travel a lot of meetings, a lot of things like that. So we do have some teammates in Discord. And I'll be honest with you, some of the SpotGamma members, like once they get it, right? And they're everyone knows what the flows are. We talk about them all the time, and so there's a lot of great traders in there, and everything's just data backed, right? It's not like I'm not gonna sit here and make a macro call. I'm not gonna sit here and try to say, hey, I know what's going to happen with the market. Everything is a series of if-then statements, right? If vol is 8% in the S&P at the money, we're probably just going to buy some puts. Why? Because they're just cheap. And so you can see here, this is where we put in and track some of the positions that we talk about, right? Is there a chance that the market, if we start to rally, that we have a huge rally? Well, what does the positioning say? Positioning right here tells us that there's nothing but negative gamma to the upside. And so could we rally very quickly back to 6,400 today? Yeah, that's a possibility. Now, what does it cost me to bet on that? If it costs me a nickel to bet on a 50-point rally, well, then maybe I'll do it. If it costs me $100, meaning the S&P options, $100, 10, 20 grand to bet on the upside, I'm not going to do it. I'm going to pay $5, oh, maybe, because there's a chance there, right? Do I want to buy puts right now with the market in the hole and all of this positive gambling down there? No. Does that mean the market's not going to tank there? I mean, anything is possible. Do I think it's probable? No. Can I sell puts for a decent amount of money right now? I mean, at least 20 minutes ago you could. Can I now? Maybe not, right? So there's the probabilities, and this kind of ties into like Kelly betting and all our stuff. The data is telling us what the map of pricing can be. FlowPatrol is giving us some information. We're getting real-time flows from Trace and from Hero, right? And so you can kind of put all these things together and you say, okay, what does it cost for me to express that idea? Maybe it's a lower probability event, but I can bet on that for real cheap, and the risk reward's amazing, right? Versus like, buying puts right here, right? To me, doesn't make any sense. We have these huge strikes. We have tons of positive gamma. Vol is relatively expensive. Does that mean the market's not going to tank? I mean, I don't think it is. Anything is possible, but why would I buy puts here, right? So like strategically, that doesn't make sense based on the data that's lined out here. So those are the types of things we're looking at. I've said a lot. I've gone on now for about 45 minutes, so I should probably give the old vocal cords a rest. I'm going to be back on today with Oliver Rennick. So you can check him out, OJ Rennick, Chicago Future of Finance. You can find that on Twitter, X. I believe also they'll be spooling up the YouTube channel, so you can see me there. I'll also be back with subscribers tomorrow, Thursday, 1 p.m. That is our Q&A session. I do 2 Q&A sessions. Today, if you sign up, go to SpotGamma.com, sign up for Alpha, put in Flow50. We are doing a series of videos. You can check those out. SpotGamma syllabus, a new session today, going through in detail how to use our different features and functions. So if you go into our webinar replays page where we keep everything for our members, you can see how we do sharpen your skills, right? All the different parts of our platform. These are hour-long videos that go through in detail every single little facet of the platform. So you have one of those coming up today. If you're a SpotGamma subscriber, be on the watch for that. But I'll be back tomorrow at 1 p.m. for subscribers in the subscriber webinar. Very powerful bounce off of a level. We called as soon as we got in here. We also called on Twitter. So it's not prophecy. It's not a, hey, look at how great we are. It's just saying, like, please pay attention to the data, right? That's it. The data is there. It's a huge strike. Market does the same thing every time. So, I feel like it's kind of foolish not to watch the data, right? So anyways, that's it. SpotGamma.com/FlowPatrol if you're new and you want to sign up for this. Also, SpotGamma subscribers, they will be getting FlowPatrol report in perpetuity. If you are not signed up for SpotGamma at the end of August, FlowPatrol is going to go away from you. You won't get the emails anymore, but if you go to SpotGamma.com, sign up, Flow50, then we are happy to have you on board, and you can keep getting FlowPatrol, and then you can also dig into stuff like Equity Hub and check out all of the different positions. All right, that's going to be it for me. Thank you all very much. I appreciate it. I hope that today was helpful. Any feedback you got, we'd love to have it. You can email our customer support at info@spotgamma.com. If you have feedback on FlowPatrol specifically, you can email us, email me, flowpatrol@spotgamma.com. We'd love it if you share the report. We'd love it if you get more people involved with the report. That is free. And so getting that word out is great. The response has been incredible. And we very much appreciate all of your participation, and most importantly for our SpotGamma members. Love you guys very much. JT's gonna be on shortly. I'll be on tomorrow. Thank you all. That's it. We'll see you later. That's for me not blowing tech. I've been blowing a lot of tech lately, and this time we were good. So all right, that's it. Take care, everybody. See ya.